Prime Minister Tan Sri Muhyiddin Yassin will advise the King to reopen the Parliament starting July 26th. A statement by the Prime Minister's office said the Dewan Rakyat will reconvene for 5 days from July 26th to 29th and on August 2nd, and the Bank Negara will sit from August 3rd to 5th. It said the purpose of the special sitting is to brief members of Parliament on the National Recovery Plan and to amend all laws and regulations to enable parliamentary sittings to be held in a hybrid manner. All emergency proclamations and ordinances made by the Yang di-Pertuan Agong will also be tabled before both houses of Parliament. It said the government has agreed to this and that all the cabinet ministers have been informed of this decision. Last week, de facto Law and Parliament Minister Datuk Sri Taqiyuddin Hassan said that Parliament will reconvene before August 1st, which marks the end of the state of emergency. The palace has twice issued statements saying the Agong believes that Parliament could and should be reconvened as soon as possible. Nomura research expects Bank Negara Malaysia to cut the overnight policy rate by 25 basis points to a fresh low of 1.5% at its Monetary Policy Committee meeting this Thursday. Its chief ASEAN economist, Yuben Pericles, believes the rate cut is possible due to the latest lockdown, which is expected to derail the economic recovery momentum. Note that Selangor and Kuala Lumpur contribute about 40% to the nation's gross domestic product. Pericles said in a media conference call today that the downside risk that BNM has been flagging in recent months is now materializing, therefore warranting an adjustment in the policy stance to increase the accommodation level and support the recovery. The OPR has been kept unchanged at 1.75% since July last year, after the central bank slashed 125 basis points in the first half of 2020 to prevent the domestic economy from deteriorating. Other supporting reasons for the rate cut, Pericles noted, are the country's high household debt to GDP ratio of above 90% last year, as well as lower than expected inflation rate. Vaccines have been rolled out, but there is also a fresh wave of COVID-19 infections globally. Still, Top Glove Corp is heading down. Top Glove shares dipped as much as 1.99% or 8 cents to 3 ringgit 93, the lowest since May last year, before paring some losses to settle at 3 ringgit 95 at 5 p.m. At the current price, it has a market capitalization of 32.42 billion ringgit. There were 22 million shares traded. Its peers were also not spared from the sell-down, with Hartalega Holdings closing lower at 7 ringgit 1 cent after dropping 0.14% or 1 cent for a market value of 24.03 billion ringgit. Supermax Corp fell 3.72% or 12 cent to close at 3 ringgit 11, and Kosan Rubber Industries was down 0.32% or 1 cent to 3 ringgit and 7 cent. The selling interest spilled over to the smaller cap glove counters. Rubberax Corp Malaysia declined 2.92% or 2.5 cent to 83 cent. Comfort Gloves fell 3.54% or 7 cent to settle at 1 ringgit 91, and CarePlus Group slipped 1.21% or 2 cent to end at 1 ringgit 63. Ireka Corp substantial shareholder Ideal Land Holdings sold 21.67 million shares via an off-market transaction last Friday. Ideal Land is a vehicle controlled by Ireka Executive Chairman Datuk Lai Siu Wah and his son Datuk Lai Vun Hon, who is Ireka's Group MD, as well as his daughter and Group Deputy MD Monica Lai Vun Hui. This reduced the family's direct stake in Ireka to 51.83 million shares, equivalent to a 27.76% stake from around 39.36% earlier. The group also announced that Magnipact Resources and Green Riverdale Holdings had ceased to be its substantial shareholders. Magnipact and Green Riverdale are controlled by Siwa's sibling Lai Man Moy and her spouse Chan Su Ha alias Chan Kei Chong. Magnipact sold 23.1 million shares via an off-market transaction, while Green Riverdale ceased to be a substantial shareholder of Ireka due to its deemed interest held through Magnipact. Man Moy and Chan's son, Chan Chi-kian, is an executive director of Ireka. Stock exchange filings also revealed Kenanga Investors now controls 55.93 million shares in Ireka. That's equivalent to a 29.96% stake. Kenanga said these shares were acquired via a direct business transaction. For FY21, Ireka saw its net loss narrow to 24.22 million ringgit from 33.29 million ringgit for the previous financial year. Full-year revenue, meanwhile, increased by 9% to 171.75 million ringgit from 157.05 million ringgit for FY20. Shares in Ireka closed 2.3% higher today at 66.5 sen for a market value of 124.2 million ringgit. On the heels of Malaysia's downgrade to the lowest tier in the US's 2021 Trafficking in Persons report, the Human Resources Ministry says it will review the fees charged by private recruitment agencies and scrutinize agreements with the workers' countries of origin. Last Friday, news reports quoting the US State Department claimed that Malaysia's predominant human trafficking crime is forced labour and that the country has not been making significant efforts to adequately address these allegations. Human Resources Minister Datuk Sri Sarawanan Murugan said in a statement today that his ministry views the issues raised seriously and will continue to implement measures to address them. He said the ministry will take a second look at charges imposed by recruitment agents to see if there are hidden charges that could lead to exploitation and debt bondage. The ministry will also examine the MOUs that have been and will be inked with the workers' home countries to strengthen the element of protection of these workers' rights, while also keeping in mind the importance of not burdening employers. It is also collaborating with the International Labour Organization to develop a national action plan on forced and child labour, which should be finalized in the fourth quarter of this year.